learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watches coming in on May 21st, 2020, and the China stock ban is coming, or maybe it has already arrived. This was the reason why we had some volatility today, but we still closed up 1.79. We pretty much made up all of the loss from yesterday. There's your previous close line. We closed there. That's just, it's pretty much kind of unchanged following that massive rally we saw on Monday, but this piece of news was important. We've talked about this. It caused a few different plays that we had, and we also got to profit off of a lot of the news plays we've been going over. And there was also the announcement of the 20-year bond. That was the first time they sold that today. Last time was in the 80s, but that was kind of important. We'll discuss that, but there was a few different things. However, today was fairly calm, but not calm, and still a lot of different pieces of news. So we have a lot to go over, and I have two specific plays. One of them I really like. We made a lot of plays on the small account, that small Robinhood. We actually made that Facebook hit, if you guys saw that one. So I have some plays I want to go over. This one's a little bit of a bigger play I have in mind. I have two different plays. So let's get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, ask questions, watch the play, anything. Just all we ask is you're positive and respectful. Shout out to chat, baby. God bless you all. Glad you're feeling loose. You're feeling loose. No pressure, you know? And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post them below. We have to source that info. Somebody find me a good premium sale. Someone give me a good credit spread, or NVIDIA earnings tomorrow. You got the iron condors, the credit spreads. We're going to see what that's pricing in, but that's going to be one of those plays. So if you got a play below, post that below. Wait, if you have a play, post it below. Okay, yeah. But right off the bat, I want to go over the China thing, but one thing I want to discuss is that impatience is setting in. And I encourage you to embrace it. And what I mean by that is that market participants are getting impatient. Again, you're seeing what the market's doing. You're seeing these earnings. We're seeing volatility in the bonds. And then we also had the Fed minutes today. I still need to go over that. And again, every day news is coming out, whether it's policy implementation or not. People are reacting to it very, very specifically. But now it's getting to the point where you're going to start to see divergences, and this is what will cause volatility. Remember the Hindenburg omen. Keep an eye out for that, where you start to see, when you see mass groups go one end to the other end and it really becomes polarized, that is the true definition of volatility. So remember, it is summer, but I'm putting that out there because it even has to do with even this China news and some of this stuff, and even where we're at and when is the market either going to crash, when is it going to fix, what is going to happen. But people are impatient because everyone's kind of aware that this isn't it. So I encourage you to embrace it, because now as people start to get impatient, there's going to be moves, but they might move too prematurely. So keep your eye out for that. Be smart with this, and then just understand kind of where we're at with the market, but benefits of waiting to respond to confirmation, or sometimes even being too early like we have been. So that's the next thing, the China stock ban. So we have talked about this nonstop. I even talked about this yesterday. Again, more escalation came out yesterday, but I even said it wasn't real escalation. I even said I've been early. I even got impatient. I was like, dude, I was so early with this. I was like, okay, maybe it's not. And then today now, what happened, we'll go over the main points, but senators passed a bill now that could essentially lead to China stocks getting delisted. So it's not saying that they're just going to get rid of Chinese stocks arbitrarily, you know, if it's a Chinese company at ADR, get rid of it. No, but they're saying that they want regulation, and most likely than not, regulation that any company would follow or any other person would follow, but they know that if these companies most likely won't be able to comply, or there is going to be something exposed if they do comply. And that would lead them to getting delisted. It's kind of like auditing them, or we gave them a bunch of drugs and then we said we have to drug test you if you want to play. So they know they're going to fail. So that's why it had some effect. Chinese stocks reacted, but this whole time, you could even see it in the stock prices. Nobody knows the scope of how to take this because, again, this whole situation is escalating. It's not at the boiling point. So this was escalation, but it's still not the real escalation. One, we have to see what China does, but then you will see it's when somebody bites the dust. That's really what the market is telling us right now, because prices are changing. We did get to play it, but at the end of the day, the market's like, well, until we see the real thing, until we see someone get clapped, I don't think they're going to respond. So it's going to be really a hit or miss as far as the play side. So we'll talk about that, but that was important. And this is what they talked about in the bill. And again, yesterday they talked about it. So people were saying there's talks about this senator bill coming through, but now they took it to Senate and it passed. And here are some of the main points. They're saying that the bill would require companies to certify that they are not owned or controlled by a foreign government. Think about this. This isn't just for China. And again, people are getting bothered by this whole situation in a way. They're threatening to pull money from the World Health Organization, but now how can you retaliate? Well, using finance and money. This would at least add some scrutiny, and it would kind of just set the standard here of what we are going to allow, or that is now the notion that they have behind pushing this bill, because they're pretty much saying the standards are too low. So they're going to say for any company, but specifically these Chinese ones, they will have to answer if they are owned by a foreign government. That is important because, well, how will that affect finances? How could that affect the company as well as investors in the United States? The next question, or the next thing, it says that if American regulators are unable to inspect the company's audits for 3 consecutive years, the firm's securities will be banned. So again, you saw what happened with Lukin with any of these companies. If they said, okay, we want to see everything, or even just 3 consecutive years of audits, and they know most of these people won't have it or are willing to give it up, or better yet, they're owned by a government and the government won't allow the company to give it up, well, what's going to happen? They will get banned. And then finally, the passage says that Senate reflects the anger among lawmakers towards China and what regulators say is a disregard of American financial disclosure standards, which it really is. But I think it's getting to the point. You have a whole generation of investors, we talked about this on stream, not really familiar with what China has done in the past when it comes to finances, whereas a lot of people have expected this, but now it's like you kind of have to reteach it that there's that. But then the question is, why do we even allow it to begin with? So this is interesting. This is going to set the stage to escalation. We will see what the House says, and if the House passes it through, that will be the game changer, and prices will change. And then once companies start clapping, that's when the real action is going to happen. But if the House passes the bill, there will be an immediate repricing of the Chinese stocks, but only to a degree, because now people are going to expect danger. They're going to price in danger of getting clapped by legislation. So there's that. That was a good piece of news. And then the 20-year bond, there was great demand. I thought that was a great sign, but this is the last time they sold a 20-year bond. They've done it before, so it's not a new bond, but this is the last time they've done this since the late 80s. But I will give you updates on this because, one, we want to see how it's going to affect TLT and obviously bonds, but the 10-year went down. But keep your eye on for it, and you could see TLT. And one thing I'll show you, imagine what we kept talking about the last few days with the Main Street credit facility and the stimulus. You're now seeing the dollar go down in the Fed. So interesting enough, now the dollar's going down. Now TLT might do its own thing, but you're seeing the dollar weaken there a little bit. So we're getting some moves, and that's what I'm saying. The 20-year bond was news, but the bond market's going to act slow. The real effect of what happened today is going to shine through in a few months. So that's what we need to keep our eye out for, and that's what I'm going to be looking at it. So I will give you guys updates on it, but I believe that is pretty much it. Yeah, we just have the stocks that we traded today. So I guess let us get into the plays. So right off the bat, we made 3 plays actually. These are the ones that we made today. These are the 2 that I'm going to be looking at. We sold out of the Facebook. We'll go over that, but I want to wait till Facebook dips to double dip or sell premium. But now the main key tomorrow is going to be NVIDIA. They have earnings. They went up a lot. This is one you could use the earnings criteria on, but NVIDIA is a stock that moves for earnings, but then also big IV run up. So it's going to be either a great opportunity for a shocking surprise, a big move down, or very, very expensive premium that's so expensive it says nothing else but to sell premium. So that's what I'm going to be looking for. I'm leaning towards selling premium. We'll go over that right now, but that's going to be the first company I'm going to look for. And if you guys know how I sell premium and play these, I wait till the end of the day. Usually if I'm going to be selling any sort of premium in the beginning, or I'll sell some in the morning, and then I'll finalize the position at the end of the day. So the idea is before you sell premium, you want to see where the stock closes at earnings, because that's pretty much where it's going to move from. So there's that. There's the Facebook, but then we played Baba, Baidu, and Disney, and let me pull these up for you. Okay, so we did it on the small Robinhood, but we got these plays great, and I even lagged on the Baidu, but the first play we got was this Baba 182 5 put. And again, if you're on stream, I'm making it clear when I'm doing this small account thing. I even thought about today. I was focusing on this a little too much because some of those plays I could have executed a lot faster, like the Baidu. So keep that in mind. But the main thing we've been talking about is going small. Again, we hit that Facebook play. We sold out of that yesterday. And don't you worry, I took a screenshot for you. But $22, sold it at $257. That $232 call, we talked about it on the watch list and everything. I think it closed. I mean, it's expensive right now, but I sold out of that, and the idea was the cash balance because again, I had like $200 cash in this account, so now I have $259 cash, more than we started, but now I still have all of these plays. But this is now why I went with the Baba. I went with $14. The news drop, did the same strategy. I was like, okay, small account though. I said it yesterday. You don't want to blow up your accounts with a bunch of those $50 ones. I said, well, if there is news and there is going to be volatility, I'll just go with these shorter time frames. I might have to flip them a little bit quicker because, again, I sold that Facebook pretty early. It's a small account. I had to balance my budget. So you're not going to be able to ride them out as long, but as long as I get some of these plays out the way, if we're able to hit these 1-for-5s and build up the account balance, have enough to sell premium, it will put us in a good position to build this small account. But at the same time, when there's a lot of risk, the market's moving slow, it could move up or down on anything, you don't want to spend too much on a play. So I bought one. I mean, this is what I'm saying. If you're spending more than these, this is how you can speed up blowing in an account versus the other way of growing a really small account. Because think about it, $14. And again, even if you have a $10,000 account, when you're putting in $140, $200, again, 5 different plays, it will start to add up. So keep that in mind. And I kept that in mind. We bought this at $14. It closed at peaked out at like $80 and then came down to 40. So again, it had a lot of value, but that one, I'm going to ride that one out. We have till next week. And then I did the same thing with the Baidu, but I was late on this and I ended up paying 26. I could have got it at 10 cents, but I lagged. That was the Robinhood thing I was talking about. But this one shot up to like 86 and then I ghetto spreaded it. So you see, I bought this for $26. It went up. It was at like $86. So we had a nice gain, but given the news, I kind of wanted to play this. So what did I do is I ghetto spreaded it. You see, I bought this one, but then I shorted this contract. So I shorted the 85 put and I got $30 back. So remember, I spent 26 on this one. It went up to $80 when this one was at $80. I have a put at 92.5 on Baidu. So anything below 92.5, you would be in the money and make money. But now, since I paid $20 for this, I sold somebody the 85, which is a worse quality put for more than I spent. So I made $4 net profit, and now there's zero possibility of me being able to lose on this play. It's actually now about a $750 difference. So if Baidu keeps dropping by next week and tanks because of any of this news, I will make $700. If it doesn't, I will walk away with $4 more than I had. So did this, control the budget. Those were the 2 China plays we made. And then again, we made some of those and have the other ones on the Tastyworks and all that. And then finally, I got Disney. And there was a report, people were talking about like Disney games being played, the NBA games being played at Disney. But then there was news that Universal, SeaWorld, and Disney parks are looking to start reopening. It started moving up. Netflix went down. I was like, well, it started to move, did a $20 play, put that in there. And my logic was that I already got the profit from the Facebook. We could justify it. I ghetto spreaded this Baidu, so that was a play. But cash-wise, it didn't affect us. This play has value, but I only spent $13 on it. I grabbed this, so I pretty much spent $30 on the day after selling that Facebook for $230. So still got to walk away with that $200 cash. And now I have all of these plays till next week. We still have that Apple we bought yesterday. We have that UNH and then these other, I forgot, these are still till June. We still got some plays, man. RIP. I'm sorry. But those were those plays. Those are the ones we're holding. And again, like I'm saying, now the next thing I want to look at is those Facebooks and how to play it, but now NVIDIA. So if you guys aren't familiar with pricing in earnings on any of these NVIDIAs, I've gone over this a lot, almost as many times as we've brainwashed you, but you take the at-the-money contracts. So again, take the at-the-money contracts. Where are they? It's like doing a strangle, but then the ones that expire this week because earnings are tomorrow. So it's saying by the end of the week, where do people expect the stock is going to go? Look at what they're charging. This has a specific break even. So you take both of the break evens at the money, and that's telling you where the market thinks the stock is going to go after earnings. Why? Because if they thought it would go higher, they would charge more. If they thought it was going to go lower, they would charge less. So it's 361.27. So these are about $1.27 in the money. So that's like $11, $11.40, and then minus another dollar here. These are out of the money plus $13.90. So they're pricing about like $25 on this stock. And what are they at? They're at $3.40. So that's just under a 10% move. Surprisingly, that is not that big because NVIDIA can move 10%. So the question is now finding this play. So really what I'm going to be looking for is a credit spread or even an iron condor that could give me enough credit where it's pretty much, I want an 80-20. I want 80% credit to collateral and I want it to be fairly reasonable of getting in the money. So again, now the problem with this number right now, how am I going to figure out this play? I know it's pricing in $23 now. That's what I'm telling you, but we need to see how it plays out throughout the end of the day. Because like I said, where this stock ends up at the end of the day, that is going to be the price point to which we're going to factor in all premium buys, sells, and where the range pretty much that I think it's going to fall into. Now, what I am thinking is going about July or even I think June 19th. This should have a little, 31 days, 45 days gives you a good, premium, has chance to decay, but I want to do that old strategy. Pretty much, I think NVIDIA could go up a little, but I do ultimately think volatility will clap it. So what I kind of want is one of these in the money call credit spreads, and just for a high amount of money. So let me see. See, it kind of sucks because you really won't get too much, but I'm talking like even one of these with time, like what, a 330? Yeah, so if it goes back, pretty much back down to around here, but like these 330s says 255 at the bid, so you'd be pretty much risking $240 to make $250 if that's what you get. But if I could get like $3 or $400 on some credit, risk 100 or 200, and pretty much saying in the next month that regardless of what NVIDIA does, it's pretty much going to come back around this range. That is what I'm trying to bet on here, is what I'm saying is that after this earnings, I think it could even go up high, but I don't think too much, and I think it's just pretty much going to stay in a range like we've been talking about, or at the very least go down. That's why I don't really necessarily want to sell a condor and do the puts, but we will see what the premium's offering. But that is pretty much it for those plays. As far as everything else, we still have a lot of other stuff. So these are all the plays we made again. We had those JDs yesterday. We're holding those. I forgot. I don't know what they did performance-wise. And we still have those old Netflixes. I forgot about that. Or not Netflix, Facebook. Remember that September earnings play? That stock is now, or that one's up 1,000% now. Watch those again. All the Chinese companies I'm going to be looking at, but I'm just going to pretty much, we have the Baidu Ghetto spreaded. Hold that till near expiration. It's a win-win no matter what. And that BABA, I'm going to hold it near expiration as well, because I like this news. I want to let it ride out, and again, controlling the balances. Why? I think they were moving after hours. Yeah, they fell after hours, so watch them. I don't know, did JD go with it? Nah, not as much. Not at all. But watch them again. That Disney as well. I thought that was interesting news, and if Disney gets some steam. But now, watch Spotify. They kept killing it again. And this is a good point to notice. Again, think about how many people, you guys, you're watching the stream, you're watching these videos. We're getting the news. We get it early. Think about digestion. One, we got it early. It digests throughout the day. Joe Rogan makes the announcement. People are digesting. But then what happened? People saw this the day before. Then they wake up, they read the news. And then some people are like, oh, I just heard it. Oh, maybe this is it. Even Jim Cramer today was like, oh, I like Spotify now. So do you see that's digestion and people kind of going through all of this? So keep that in mind. And I was even getting I had a crazy idea. We still have those Spotifys. We had the shares, but remember we got those July ones. We bought those at 50 cents. They're at $300. I still have two of them. So I think it's still on the history. Yeah, remember these from yesterday? Bought those at 50 cents. We bought 5 of them, sold 3 of them out at $150, but now those closed at $3 a pop, and I'm still having both those. So that's $600. The ironic part, remember, we have the spot shares on our small account. That option is now 60% of the value of our equity. So I was like, maybe I should just sell that. And then I could use that as a long-term profit. But at the same time, like I told you guys yesterday, let's say it goes crazy. And here's the best part about Spotify. I keep calling it Shopify, so forgive me. But the best part about this is this was an IPO, and it's now nearing this top. So this could lead to a crazy breakout there. And the best part about this is that it low-key has fundamentally changed the company, considering the asset, I would say, of Joe Rogan. Again, they have him exclusive. They own the intellectual property. It's not like he is a physical asset, but think about it. He is a $50 million or $100 million person. That's what they're paying. That's a big asset. If you think about it, that's an investment. So having the rights to all his stuff in the future, I really do think this changes the future growth forecast, and I can't wait to see what analysts are going to start to forecast because of him. So let's see. And here's the thing, though, give it some time, because there's going to be several waves of this. So I want to grab a very big position on Spotify. However, I flipped the coin and said, no, I'm going to stick with my normal plan of just using it in the long-term portfolio. But here's the key to it. Think Disney Plus. They added Disney Plus, stock pop, but then it had to deal with what it had to deal with. Again, this is a growth stock, so it comes back down, and then right before the earnings after, so again, September 1st is one date with Joe Rogan, and then end of the year, those 2 dates, the expectations will change. So it's going to pop, drop down like a biotech, like you've seen with the drug, and then up until that moment where that information could solidify estimates, or, oh my gosh, they did these numbers, or we couldn't expect that Joe Rogan brought this many people, or, oh, now this other person, then you're going to get the follow through. But at the end of the day, short term, watch for them to break above there. So I still have those options. We still have the shares. Great news. People are still picking it up all over the place. And then Shopify, same exact thing. This one I think it went down in the morning, and then it just shot. Or was it yesterday? No, yeah, I don't know. This morning it was down, and the contract started going down on me. And remember, those puts ended up dropping. Remember that last put we dropped? It's only worth $50 now. But that call we bought yesterday at 2 something, that started to go up, and Shopify had a good day. So we're still in that, but kind of even the same logic now. One, Shopify had this crazy run up, but also it's breaking out near the top, and it's one of those relatively new companies. Again, Spotify's a little newer, so I'm excited for that. I really like the Spotify's, actually. So hold those. And then here's the other play I forgot to tell you about, Yang. This is the inverse. It's like the UVXY for China stocks. This could be the next play. I'm looking at it, but it's very illiquid, very hard, but it's giving me some SCO vibes, so that's why I'm going to look for it. But this one isn't going to be a small account play, because this one's like a shitty UUP. TLT is way better, but like UUP, where it's very low quality, but given the nature, it's down. And again, these China stocks are going to be hard, because this whole time with everything going on, the China stocks aren't moving, and then Yang is kind of more linked to the S&P 5. It's crazy. So keep that in mind, again, and look at the underlying holdings and understand it's an ETF. But watch Yang and then watch HD continuation. Again, these are ones I'm going to be eyeing for some credit spreads, as well as Walmart and McDonald's. But don't forget, these stocks don't really move much, but they've all had these continuation moves from earnings. And then now look at Johnson & Johnson. This is something I want you guys to remember, the rotations. Even though the market's kind of doing its thing and a lot of things look similar, just you could start to notice rotations here. Market starts to pop. Johnson & Johnson's going down. How come Walmart has earnings? It's kind of not really feeling it. That looks like Johnson & Johnson to a degree. Here's McDonald's. They're following through with it. What about Home Depot? So look for laggers and leaders, but remember those rotations that would normally occur with the market. You're not going to see it as clearly as it traditionally does, but keep your eye on for it to give you some little hints and clues. So watch all those. And then finally, TLT and UUP. I already pointed out, just take notice of how they're moving, but watch TLT, especially with the 20-year bond. We need to see we got to give it some time to understand what it's doing to the entire yield curve. Where is demand on bonds going? So now you add the 20-year, it's going to spread demand out. So the fact that the 20-year had demand, it brought down the 10-year as well. That brings TLT up, but we need to see how this is going to be. This is, I mean, it's kind of like adding more share. It's weird. It's like when a stock gets reverse split in a way. So again, this doesn't happen a lot. Last time was 1987, I believe. So keep this in mind. We're going to watch it, but this is all pointing towards November, October, December. I think I said that in the wrong order. Okay, you get it. I'm tired. You're tired. You're getting it. I'm going to see you guys in the morning. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And you got to understand, small beginnings, baby. Appreciate it. I appreciate all you. Thank you for 100,000 subscribers on that one channel, 150 on this channel. You guys are the best, but at the same time, start small, baby. I love you guys. I believe in you. You are seeing what you could do with it. Don't listen and keep scaling up fast. We have a lot of time. There's still a lot of time, and if you don't burn the money, that's it. What are you okay with? What are you comfortable with? Take control, baby. Let's go. But the cult loves you. I love you, and we'll see you in the morning. Let's go. Send